Everybody, welcome. My name is Bennett Tchaikovsky, and welcome to my part 7 of the statement of cash flows, what I call fill in the blank. Now, for those of you who are taking my class, this will be extremely applicable. For those of you who are not, hopefully this gives you a different kind of problem to kind of test your knowledge of going through and doing cash flows. So my disclaimer and copyright notice, the information and opinion in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only. It does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2023 by myself, Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So let's go ahead and kind of look at this fill in the blank type of question. So here we've got Chuco, and you've got basically over here a blank over here. Got operating activities, net cash blank operating activities, investing activities, net cash blank investing activities, repurchase of a bond payable, net cash blank financing activities, total change in cash, and everything else. And I think what I should have also said too, prepare a statement of cash flows for the year ended 12/31/21. So what we're being asked to do is we're given additional information in this form over here. So what we want to do first is we want to put this into the T accounts as we see it. So the thing to remember is for like net income, how would that be going through and showing up? Well, net income, remember in cash, we have operating, investing, and then we have financing. Okay, so over here, and with almost all these cash flow questions, these are kind of set up already. So remember, when we see a positive amount, it means it must have been a debit over here in the cash T account, an increase in accounts payable. Because it's a debit, it's going to be a positive amount. It's going to show up over here as a debit to cash, a decrease because this is a negative. Remember, a decrease in accrued liabilities. When I'm decreasing a liability, it's going to go over here and show as a credit to cash. And investing, I have sale of short-term investments because this is a positive. This is going to be a debit balance. Over here, I've got a repurchase of a bond payable, means I bought back one of my bonds. Over here, this will show as 100,000. So I don't, like, as far as the totals go, I would not give this to you. But as we're going through and looking over here, I'm putting the information that are in the T accounts right over here. The next thing I want to do, and again, I'm getting all this information here. The next thing I want to do is I want to take this information and put it into the various T accounts over here. My equipment had a beginning balance of 300, an ending balance of 450. Accumulated depreciation, this is a contra asset account, opening of 125, an ending of 160. Over here, patent, opening balance of 0, ending balance of 150. Common stock par, credit of 1, ending credit of 1. Additional paid in capital common stock, this is a part of owner's equity, 149, and then 299. So all we've done so far is we've taken the information that's been given to us and we've put it into the T accounts. So skeleton is provided. And by the way, too, if you're taking my class and you get a question, right, like over here, like one of the other big questions, like, oh my goodness, I have to go through and prepare a statement of cash flows. You can use this type of question to help you answer one of the other ones. So what we're going to do, so we're doing, again, we've dealt with the skeleton where we've input in the values. Now we're going to deal with the additional information. So let's go over here and deal with this additional information. So We exchanged 150,000 worth of common stock and received a patent worth 150,000 on December 31st, 2021. So this is, I gave up 150,000 worth of stock. So this would normally be common stock at par, additional paid-in capital, common stock. Gave up stock, I'm going to credit stock, and I received a patent worth 150. Now this common stock at par hasn't changed. So what this must have been is basically I must have been going through and crediting additional paid-in capital common stock. What you have to go through and do with this, though, is we still have to deal with the T accounts. Why do we have to deal with the T accounts? Because what do we call this type of transaction? That's right. This is a non-cash transaction. So what I'm going to do is I'm going to say basically received a patent by issuing 150,000 of common stock. I probably would just say received a patent by issuing 150,000 of common stock. This is a non-cash transaction. It still has to be input into the statement of cash flows, but that's how we're going to go through and deal with it. Let's go ahead and look at our next one. The next two questions deal with the sale of equipment. When we're going through and dealing with the sale of equipment, we need to remember this journal entry, which is I have a loss balancing. Over here, I'm going to have cash that I received, accumulated depreciation on that old equipment because I got to take it off my books. Equipment, gain, balancing. What I'm going to go through and do, very important, right? I'm going to basically put the values of the equipment into the T accounts. The AD equipment is going to go there. The loss is going to be a debit in the operating, gain, credit in the operating. The cash I receive is going to go into the investing section. So right over here, I sold equipment costing 30,000 with accumulated depreciation of 15 for 16,000 cash. Over here, I have debits of 31. I have credits of 30. To make this balance, I need a credit for $1,000. So another way of looking at this, it was on my books for 15,000. That's my net book value. The net book value is the equipment less the accumulated depreciation on the equipment. It's a contra asset account, right? It's going to have a negative balance. So my net book value is 15. Sold it for 16 means I made a profit of 1. So what I now need to go through and do is put this into the T accounts appropriately. Over here, I sold equipment. This is going to be shown over here as a credit for 30. The accumulated depreciation on the equipment is going to be a debit for 15,000. The cash I receive is going to be in the vesting section. I need to break out each sale of equipment separately. So my sale of equipment, it's going to be right over here, 16,000. I'm going to have a gain on sale of equipment. My gain on sale of equipment will be a credit. Remember, I'm directly crediting over here, and this will be in the operating section. Okay, so that's our first one. Let's go to our second one. Our second sale of equipment is right over here. I sold equipment costing 50,000 with accumulated depreciation of 35 for $5,000 cash. Well, in this case over here, the equipment had a cost of 50, accumulated depreciation of 35, value of 15. I only sold it for 5. So over here, I'm going to have a loss for $10,000. What do? Over here, the sale of equipment. This is going to basically be 5,000 cash. I'm going to have a loss on sale of equipment. Over here, my loss on sale of equipment will basically be 10,000. Over here, I am crediting equipment 450. And I'm debiting accumulated depreciation on equipment for 35. So again, when I'm doing sales of equipment, this is how I need to go through and handle it. The cash proceeds go into the investing section. I need to list out each one separately, right? So this is the first one. The second one, gains show as a credit, losses show as a debit. Over here, the equipment itself that I got rid of, got to take that out of the equipment account, and then over here on the accumulated depreciation of equipment. So I've now dealt with the additional information, right? So I've dealt with the additional information first, right? So what I now need to go through and do is I need to balance my T accounts. Remember, this question is already telling us what the total change in cash was. I know what I have to go through and get to. So that's what we're aiming for. But I have to make sure that my T accounts balance first. My common stock par, additional paid in capital common stock, and my patent all balance. So I'm good to go. This was a non-cash transaction. However, for the equipment, 300 minus 80 or 30 plus 50 does not equal 450, right? What is it I'm going to need to balance? Well, you could say 300 plus X minus 80 equals 450. 300 plus X equals 530. X is equal to 230. If I put 230,000 here and I say 300 plus 230 minus 30 minus 50, this equals 450. What is this? This is a purchase of equipment, and this is big points. Like when I'm going through and grading this is big points because you've got to know how to balance this particular question. So this is going to show up as a credit in the investing section. We're going to call this a purchase of equipment. Now, this account is now balanced. For this one here, accumulated depreciation on equipment. What we're talking about here, the balancing entry, this is going to be for depreciation expense. Let's go through and balance this. So I've got over here, to balance this, I'm clearly going to need a credit. So I'm going to have 125 plus Y minus 15 minus 35 equals 160, right? So another way of going through and writing this is 75 plus Y equals 160. Y is equal to 85,000. If I put 85,000 here, 125 plus 85 minus 15 minus 35, this gives me 160. I do the opposite to cash. This is going to go into the operating section. Very, very important. I do not call this an increase in accumulated depreciation. You're going to call it what it is, which is depreciation expense. So over here, I've got total debits of 425. I have total credits of 57. I subtract the smaller from the larger balance, leave the remainder on the larger side. This is going to give me net cash provided by operating activities of 368. For my investing, I had 275 plus 16 plus 5, 30. I subtract the smaller from the larger balance. This is going to be net cash provided by investing. Come down over here to financing. I just had the 100,000. This is going to be net cash used in financing activities. Last thing I'm going to go through and do to check my work. I know that the total balance has to equal 334. So if I did a little T account right over here, and I'm going to kind of go through and redo that. Operating, investing, financing. So my operating was 368. My investing was 66. and my financing was 100. If I add these up over here, subtract the smaller from the larger, I get 334. So now I've gone through and I've dealt with this. So this is actually now balancing. Remember, when you get, you'll have, if you're taking my class, this is a question I love to use on the final exam. You have to know how to go through, and this is where all the points are going to be, is like when you look at the equipment and the accumulated depreciation on the equipment. So now let's go through and finish up this question. When we're going through and filling this out, we need to say for the year ended 12/31/21, right? It's for the year ended. You're going to see little like letters. That's what you're going to be going through and inputting. Over here, I'm going to have a gain on sale of equipment. I'm going to have a loss on sale of equipment. I have depreciation expense. And this will be net cash provided by operating activities. The gain on sale of equipment, because it has a credit balance, is going to show as a negative amount. The loss on sale of equipment is going to show as a debit balance. Depreciation expense, because it's debit, it will show as a positive amount. When I go through and add all these up, this should equal to my 368, which it does. For my sale of short-term investments, I already have that at 275, sale of equipment. Sale of equipment, need to list these out separately. Purchase of equipment. This is going to be net cash provided by. So my sale of equipment, this is going to be 16. This is going to be 5. The purchase of equipment, because it's a credit, will be a negative amount. So my over here, I'm adding up these 4 amounts. I get 66,000, which is what that is. The only thing I had over here, which was this is going to be used in financing activities. This is going to be 100,000. And then I've got my non-cash transaction and I'm all done. So this is an example of a fill in the blank statement of cash flows, something I like to use for my classes. It's like, it's also giving you a clue on how to go through and set up the structure for other cash flow questions. But hopefully you found this helpful, and I look forward to seeing you on future videos. Please feel free to leave a comment, and thank you for watching. And don't forget to like and subscribe, and I'll look forward to seeing you soon. Have a great day.